Welcome back, Alpha Hunters. It is a very tubular Tuesday. Yesterday was not so magnificent Monday, as I was out sick. Couldn't really talk, or I could talk actually. I probably couldn't have gone like 10 minutes without coughing. It just would have been a really bad um, live stream. So I didn't even bother. I'm actually got a cough drop in my mouth now, so I don't do it all that much. So I'm going to try not to do that as much. Hopefully I don't. But anyways, let's kind of get going. I'm going to wrap up Monday and Tuesday together. And even if you kind of know what went on yesterday, it's all right. I kind of need to get caught up. I was kind of keeping track of some things yesterday, but I was kind of going in and out of sleeping throughout the day. So hopefully you're doing a lot better than what I was over the past couple of days. Nice gap down to start the week. A little bit of trade lower there to start out the week. First hour on Monday. Nice traded higher. Then for the couple hours, kind of rebounded off the lows. Nice little lower wick on the daily. We'll take a look at that. But once we got to midday, you can see we haven't really moved, traded too much, positive or negative. So I mean, basically within the low to high of this morning is the range that we've been in through the second half of Monday and today on Tuesday. So basically within a 0.5% there on the S&P 500. So interesting. But today, yeah, not much going on. I mean, that was basically the high and low of today. So there you go. Qs. All right, a little bit more activity going on here on the Qs though. Yesterday, we did see some pretty good selling. First hour, then a little bit over an hour. And then they also got a nice little bounce off the lows there in the morning. But we got back-to-back days of early selling. First couple hours today, we got some selling that came in. A little bit of a push higher here. Nothing. This is not a crazy move at all. This is kind of more like a resting, kind of like a what we call an inverse flag pattern, kind of deal here that you get coming through here. So, is it going to be an inverse flag pattern, or are we trying to stair step higher? Yeah, I mean it's one that's kind of tough to see. If we start to roll back over, we get down to maybe this layer, and we break down that layer, then yeah, that probably was just an inverse flag pattern. We're starting to roll over, but the Qs and big tech area, that's where we're seeing a lot of the weakness. Really on the week, that's they weren't the weakest market yesterday, but they're definitely the weakest market today on Tuesday. So we'll look at some of the big tech stocks, see what's really not performing well. IWM, this is the weakest market yesterday. IWM got smoked. Huge gap down on Monday. Trade lower than the first hour and a half. Kind of slowly grinded. Got positive very briefly yesterday, but didn't hold. Came back down. Ended below the open. But we have not gotten back up to where we closed last Friday, so we haven't filled that gap yet. Even today, it's kind of a flat open, traded higher, kind of sideways here for the past couple hours. All right, that's IWM, DIA. Yeah, gap down, sell down, trade higher, sideways. Basically, since kind of like the last hour and a half yesterday, today, kind of the same thing, just sideways. Not really doing a whole lot. RSP. So interesting here on the RSP. Nice gap down, traded lower there in the first 30 minutes to an hour, 45 minutes or so. But this thing's been slowly grinding higher over the past day and a half, a little bit over a day and a half. Nice look there on the RSP from Monday's early weakness. Has not really broken down that 20 EMA on a daily either. So sitting right on it. Kind of mentioned that at the end of last week. Is like we tried to break over that December high. We have not held it twice now. Kind of mentioned, okay, like if we don't do it soon, we're gonna roll over. Well, we didn't even try to do it soon. We kind of rolled over there on Monday, but we didn't hold the breakdown. So I think the way I'd play this, if we get it close over Yeah, probably like this 158.70. If we hold a close over that, I would say that would look pretty good to be bullish there on the RSP. Or if we get a close below the 20 daily EMA, I would be willing to be more bearish at that point in time. But the thing is still just chopping sideways like it has for about the past a month and a half, coming up on 2 months. So RSP, all right, DIA, Dow Jones Industrial Average, pretty bearish day yesterday. Nothing crazy kind of going on today, obviously. A little bit of a small trade, still grinning higher, has not broken the moving average is down, not sideways consolidating like the RSP. So yeah, I mean it's still kind of in an uptrend, not really a big deal. I think you're gonna have to probably get a little bit more worried if we break, probably still this level, this bearish level, not bearish level, but this little bearish move that we did have around, oh man, a little bit below 381, like 380.8 or 380.80 or something like that, somewhere in there. I think that would be the price to watch because we are just continuing to get pushed up by the 10 EMA. I know some people like to talk about the 10 or the 20 or like to talk about the 20. Honestly, it doesn't matter. It's whatever the market respects. Some markets and some stocks, they respond very well to the 10. Some respond very well to the 20. Some respond very well to the 50. It doesn't really matter. It's just whatever that market kind of responds to. And you see just climbing this 10 here. Kind of makes me think that if it breaks that 10, it probably won't hold the 20. The 20 won't be able to hold it up. That's typically the way it goes. All right. Let's see here. IWM. Yeah, IWM had a pretty nasty day yesterday. Kind of mentioned that at the end of last week. That breakdown that we had last Wednesday was nasty, especially when, we tried to break higher here last Monday. And then the next day we came right back down, and then Wednesday just absolutely got crushed. Just was not looking well. We tried to continue bearish yesterday. Obviously, like all the other markets, it got bought up for most of the second half of the day. Like, the interesting thing is we're kind of getting back up to the 10, 20 daily moving averages. Not really doing a whole lot. We're kind of getting squeezed in here. Kind of mentioned that late last week. We might just get squeezed in here for a period of time. So we still might do that. But I think you very clearly have some pretty good levels. Like if we get a close below this 50 EMA, because we haven't closed below it. You can see we threw a pretty good lower wick below it. We bounced off of it last Thursday. We kind of bounced off of it today a little bit. But if we close below that, like I think you're going to be really looking to be just bearish, just outright bearish for a pretty good trade there. Qs though. All right, let's talk about the Qs. Oh my gosh, we'll get into some tech stocks, but this is the area where there's been a lot of. It's so interesting. I want to say underperformance, but this is where all the big, Magnificent Seven, whatever you're going to call them. I mean, they have the largest weighting here, and like we're not. It's not like the Qs are just absolutely dropping off. They don't look nearly as bad as the IWM. With IWM making some lower highs here over the past 2 months. The Qs have at least made higher highs. SPYs made higher highs. DIAs made higher highs. So, yeah, there's worse looking markets, but the problem that the Qs have is the concentration. The Qs and the SPY really both have, is the concentration of market cap in the big names, in the top 10 stocks. I'll even just say top 10 stocks. It's just easy. It's a round number. It's crazy. It's like the highest it's ever been. So, when you get to selling, and this is something I'm going to look up later this week. There's an old article from the Wall Street Journal, or no, Financial Analyst Journal, Financial Analyst Journal, and I'm gonna see if I can look it up. But basically, it talked about in periods and times of illiquidity, which basically that's every bear market. Every bear market has some aspect of illiquidity, and basically think of another way to put that is a credit crunch. Every bear market has that. Some they are worse, like 2008. That was like the main point of that bear market was that I mean it was the credit crunch, the tech market or the tech bubble that busted back in 2002 2002. Like there was some credit crunch issues, but it wasn't like the main staple. So, but basically this article did a lot of I forget who I don't remember who did the article, but I'm gonna see if I can find it. But basically the summation of the analysis in this article was the most liquid the most liquid assets get hit the hardest in bear markets in credit crunches, not illiquid assets. So you can take that to different layers of stocks. Obviously, the most liquid stocks out there. So let's just go over the heat map real quick. So, oops, let me turn off sector node group. There we go. Turn that off. So like all these have the most liquidity, right? These on the left side, they have more allocations, more volume in these stocks than all these over here to the right. And that's one of the issues that comes because when people need to sell out, they sell out of where the liquidity is. And when you have credit issues or things like that, you don't need to sell out of things that are illiquid because you got to raise liquidity. So, anyways, I'm gonna see if I can find that, kind of go through that because it is a very good thing to kind of know about bear markets. If we go back into one soon, I think we probably will be. I think that's probably rapidly approaching sometime here in the next few months. You always look back and be like, oh man, how did I miss that? But, it is what it is. It's not a big deal. Anyway, Spy's kind of doing his thing. Yeah. But anyways, Spy here, I mean, you got nothing. You got nothing. It's still above all the moving averages. I would say the most important level, besides, this zone back here, this is going to be a majorly important zone. But this low that we put in back on January 31st, if we get below that, obviously you're going to have a little bit of a change of direction then. So if that time approaches, we can talk about some things. Other than that, Spy looks all right. All right, so VIX is dropping off pretty good. It's kind of interesting, even with yesterday's kind of bearishness, the VIX kind of dropped off pretty good. I'm kind of surprised about that. The DXY, and yields also. DXY past 2 days made moves. So I kind of mentioned this on Friday. Like we consolidated here for about a month, or was it half a month? It was about a half a month below this level. And we had that very strong pop there on Friday. I was like, yeah, we're probably just going to go right through this top. And we did that right away on Monday. So we're probably into a bullish continuation move here on the DXY. Would be my understanding here. I don't really know if this little support level here around, it's about 105 or so. I don't really know if that would be like a major kind of stopping point. I think this low, these two double bottoms right here, around 105.50, I think that would be probably a good stop. We might pause at this 105, but I think we might actually get up to like 105.50, and then I think that would be an interesting spot to see if like that tops out and then we roll over. or how we consolidate setup later on. But that's DXY looks pretty good for now to probably just be bullish on it. Gold, dollar's down a little bit today. Gold up, makes sense. Other than that, gold doing its thing. Yields got hit pretty good today. Yields popped pretty strong yesterday. Got back to its, roughly back to its January highs. Not quite there, but the fact that it did it so quickly is an interesting move. Interesting move. So we'll see. Yields dropping off a little bit more today than the dollar is, at least. So, all right. 10-year yield. 10 to 2 inversion. 10 to 2 inversion. Just kind of slightly climbing today. Nothing crazy. HYG bounced off that 50 EMA. Made a bounce up to the 10 and 20 today. Okay. LQD bounced up to the 10 and 20 today. We did take out these lows yesterday here on the LQD. That's something to be very mindful of. Because we did take out those lows yesterday. We didn't hold it. We bounced off that 50 EMA. We did barely take out this high from January 12th here on February 1st. So it kind of looks like we have lower highs, lower lows kind of coming in, but not totally. I mean, we do have that, but okay. I'll be curious to see how yields really actually respond here for the next couple trading days. That's probably gonna be the one thing I'm gonna be really interested in, because they moved pretty good there Friday and Monday. Tuesday yields dropped off pretty good. TLT up a little bit today. Hugely bad day yesterday there on the TLT, but if yields continue to climb again as we go through the rest of this week, I don't think there's any particular sector of the market that really wants to see that. And I'm not even talking about like stock sectors. I'm talking about like just aspects of different areas of the financial markets. Bonds will definitely not like that. And then equities, I don't think equities will like that at all. At all. All right, let's run through. Oh, let me do sector rotation. I want to run through some few things here. So, sector performance. I'll tell you what, I'm going to do a 5-minute. I typically do a 3-minute, but I'm going to look and see what it's been like for this week. All right, here we go. So sector rotation so far for this week, we've got on the underperforming side, communications, utilities, discretionaries, materials, tech, financials, real estate, and staples. Just barely underperforming there. Outperformers, industrials, energies, and healthcare. What about today? I just want to look and see what today. How about today? Today, on Tuesday, tech is actually the biggest underperformer. Makes sense. XLC, communications, financials, discretionary, staples, utilities, energies, industrials, healthcare, real estate, materials. Okay. So that makes sense on tech. So, okay. So that's... Let me take a look at crude oil real quick. Crude oil throwing a nice little lower wick yesterday. That looks very interesting. Ooh, gasoline had a very strong day yesterday. Nice. Heating oil also had a pretty strong day yesterday.